Momentum lulled in Austin's apartment market performance during the past few months. On today's Apartment Market Dynamics from MPF Research, we'll take a look at the magnitude of that slowdown, as well as some of the influences that are shaping results. I'm Greg Willett. Cameron McIntosh is here as well. Cameron, when a metro's apartment sector stumbles, the culprit often is slower economic growth. Is that really what's happening in Austin?
More modest job production certainly looks like part of Austin's story. Total employment is now growing at an annual pace of about 20,000 jobs, according to the Bureau of Labor Statistics. That's a 2% yearly growth rate. In comparison, the annual expansion rate ran at a 4.5% to 5% rate a little earlier in this economic cycle. Slowing job growth reflects fewer additions in the professional services sector, which is a tech-heavy job category in Central Texas. Also, with the unemployment rate really low, coming in barely over 3%, finding qualified workers to fill job openings can be a struggle in this metro.
Austin's apartment demand tally cooled to 7,338 units in 2016. That's off about 20% from 2015's volume. At the same time, 2016 completions climbed 18% on an annual basis, jumping to 10,478 units. That supply-demand imbalance pushed occupancy down to 94.8%, off 110 basis points year over year. New projects moving through initial lease-up account for a lot of Austin's increased product availability, but vacancy also has bumped up a little bit in the Metro's Class B stock.
Let's take a look at what slowing demand and cooling occupancy have done to pricing power. Annual rent growth for new residents trailed off in the last half of 2016, ending the year at just 2.8%. In comparison, up until the middle of 2016, annual rent growth had averaged right around the 5% mark for the previous 6 years. There really aren't any neighborhoods or product segments where rent growth is still sky high. Class B units are doing the best, but even those properties, the yearly rent growth pace is just over the 3% mark.
Economists, for the most part, are calling for a mild upturn in Austin's job production pace in 2017. That should help stimulate solid demand for apartments. However, completions will be substantial too. Properties totaling 14,686 units are under construction right now, with scheduled deliveries in 2017 moving up to 11,374 units.
Austin's building activity is really spread out across the metro rather than concentrated in just a few spots. That should make near-term completions a little easier to digest. Still, we're expecting a tiny further dip in occupancy during the coming year.
Rent growth in 2017 seems likely to come in at approximately the 3% mark, basically holding right at the pace seen right now. In the big picture then, Austin appears set to be a middle-of-the-pack performer nationally for the next couple of years, losing the premium position that was achieved throughout much of this economic cycle. That's our look at Austin's multifamily sector. I'm Greg Willett. He's Cameron McIntosh. Thanks for watching Apartment Market Dynamics from MPF Research.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.